In this video, we're going to break down what I call my one setup that I would take for the rest of my life. It's a setup that has made me a lot of money. It's a setup that has also protected me from losing money in the market and making sure I am on the right side of the market. So in this video, I want to break down this setup. I'm going to show you trades that I have personally taken. I'm going to show you a win. I'm going to show you a loss. And I want to break down the charts so you can visually see this one setup that I would take for the rest of my life. But before we get into it, if you're new to my channel, I would appreciate it if you could hit that subscribe button. And also, if you don't follow me on my Instagram, at Ameritrade, this is my only account, I'll post a link in the description below to follow me on there. It's a really good resource where I post daily trading tips, tricks, trading recaps, and just stuff you're not going to find anywhere else on the internet. Again, the link is in the description below. You're doing yourself a disservice if you're not following me on there. But now let's get right into this video. So the first concept to this setup or strategy is I want to locate an area where there is a ton of effort but no reward in the market. Now, what this means is imagine a seller coming into the market, or imagine a buyer coming into the market, a very large one, and he's showing tons of effort. He's buying, but he's not getting rewarded, and the market is failing to move higher. Or flip it. Let's just say there's a really large seller hitting the market, aggressively hitting the bid, and the market cannot move much lower despite all this selling. He's showing a ton of effort, but that seller or that buyer is not getting rewarded. Where is the absorption? Where are we seeing all this activity? Where are a lot of buyers and sellers factored in at? This location and locating all this information is the first concept to this strategy. For this setup to make sense, we have to understand the context backing this setup. Let's go over the pre-market plan. I post these every single day in my Discord of setups I'm watching, levels I'm looking out for, and potential trading scenarios. So on this day on the S&P 500/ES, the E-mini futures, we were watching 43.54 to 43.48. This was determined a key level from previous price action. Scenario number one was as long as we can hold or bounce off of this green box at 43.54 to 43.48, I want to play the market long, targeting the next level of resistance or targeting the next level of supply, or anywhere the market can reject is where I'll place my targets. And in this example, it was 4267 and then a little above that. So now the market opens up and I'm going to show you the chart of what happens when we come into this 4354 level from the pre-market plan. Number one, it's an important level of interest. And number two, the market is consolidating inside of this range, having a very hard time moving up, but also having a hard time moving down. Now, every single time the market dips down, this is a 5-minute chart, keep in mind, we fail to move lower here, we fail to move lower here, and we also fail to move lower about 4 or 5 other times. Now, what this tells me is the market's trying to move lower, but number one, we're inside an area of demand or support, and number two, we see a ton of selling come into the market, and there's tons of effort from sellers, but they are not getting rewarded. And how I know this is watch this replay of the tape. The order flow and the tape is vital in this setup. In fact, I cannot enter or come up with the context of this without watching the order flow. So I'm going to replay this for you. And keep in mind that area of support was at 4354 where the market is currently trading. Now I want you all to keep an eye on the aggressive selling as we come into 4354. I'm going to replay this and watch all this red and all this aggressive selling as we come into 4354. We see a ton of selling. We also see a very negative delta below these lows. So what this is telling me is there's tons of selling coming into the market on the first test, and then the market then eventually bounces directly after that. The next test comes around 10:10, 10:05. Here we're going to see the market sell off. And look at all that aggressive selling, right? Directly at 4354. So we know there's tons of selling coming into the market. Is it multiple sellers? Is it one seller? That really is not important to us. What's important to us is how much size is hitting the bid, but there's no follow through. We see a negative delta of negative 750, negative 300, negative 250. It's really not that large of a negative delta. However, it's multiple tests after multiple bounces off of this where the selling is very, very aggressive. You see where my head's at right now? where I'm hovering over my cursor, there's tons of aggressive selling down there, and the next one happens at around 10:35, 10:45. Now what's important about this one is a low a day is getting broken. A lot of traders like shorting a low a day. They like putting their stop losses below a low a day. And eventually you're going to see a low a day break right here. And I'm going to speed up this even faster. And you're just going to see, look at all the negative delta building up. Again, reading the order flow. And we break the low a day. And it's safe to say at this point, there are tons of sellers showing effort into the market, not getting rewarded. And this is spotting the location for my favorite setup, because there's absorption to the sell side. There's tons of sellers not getting rewarded. Now, the only thing we're missing is waiting for buyers to step in, and that's going to lead to a valid reversal higher. And as you could see, despite all that selling near the low, we eventually broke out on nice, strong buying volume. And as we break out on this strong buying volume over here, we come into that 4267/Friday high, which was the target for the upside. So there's two ways you can execute this. Is you can get in when you spot the absorption, or you can get in once you see the buying step in, and those late shorts have to cover, further fueling a rally higher. It depends on your risk tolerance. I prefer getting in when I spot the absorption because my risk will be much smaller. And this is what it looks like from a candlestick chart. You can see the consolidation, you can see the nice move up, and then a very, very strong uptrending move simply off this level of interest, seeing a ton of effort but no reward, and the market eventually is going to have to reverse once we put those opposing participants under pressure. Now, very similar to this setup is essentially locating where there is max pain or trapped participants. Where are many getting long or short? Where are many traders stop losses at? This could be at a high a day. This could be at a low a day. This could be at VWAP. This could be at any location that you know majority of retail traders are going to either stop out at, or where they're getting long or short, because that gives us an edge in itself. For example, if I know a lot of traders are getting short as the market's rallying higher, and then we get that pullback down, that's going to attract a lot of more shorts coming into the market. If I know a lot of shorts are coming into the market, and let's just say pullbacks hold, I know we're probably going to reverse higher and put those early shorts into max pain. Where there is the most pain will be the most gain. I love seeing where a lot of traders will be in pain, because that's when we're going to get nice continuation or reversal setups that will provide the most gain for us, using that as an edge and an advantage. For example, this was the other day on the S&P 500. This is in the intraday commentary tab of the Discord. I update my thoughts in real time as the market is developing. We saw the market holding and trying to bounce off of this demand zone. We were also putting in a higher low. And as the market was rallying higher, a new level of interest established at 4421 to 4415, that if we can dip into that, I would look to target pre-market highs and then 4441 supply if I did get long on this dip down into this level of interest. So now I made a pink box at this 4421 level, and on this strong rally, I knew many were getting long. I also know that on any sign of weakness, many are trying to play a reversal and take the market short. Eventually, the market pulls back down into 4421. And how do I know this? If we look at a delta footprint, we're going to see the market rallying higher on aggressive market buying. And then we see selling step into the market. Traders perceive this selling, they take it short. And on this wick down, this essentially is a little bit of a stop run where it attracts many to get short, where all this selling is down here at these lows. For majority to hop on the wrong side of the market, and if we start coming up, these guys are going to be trapped, and they are going to be put in what I call max pain to fuel a further rally higher. To validate this even more, let's look at this replay of the order flow, and I want you all to keep an eye on 4421, where you see this bottom little orange line here. I want you to make a note of all the aggressive selling stepping in before this move here, putting it in here, and look as we just dipped into 4421 and held it automatically. As soon as I spot this little action and the market spends some time here defending that level and especially holding it while increasing buying volume comes in, this is when it sparks my interest, and I take the market long at 4422 as soon as that level bounced, targeting a simple 7-point scalp above pre-market high. And if we can get above that, then I will hold runners for a further supply zone target above. Again, this is in real time where we took the market long at 4422. The thesis for it where buyers supported the pullback lower and sellers entering prematurely. We hold this level perfectly. We come into our target about 10 minutes later, and then eventually the market continues to rally and these guys get put in max pain, simply causing a further rally higher. Now, what's very, very important about these setups is you have to use context. It can't be just used alone. And order flow / tape reading is vital in this because you have to pinpoint an entry. And for myself, I could only speak for the setup on my own behalf. Some people don't like using the tape, but I need to use context and I need to use the tape. It's best at a level of interest versus a random point on the charts that you're just making up along the way. Speed and pace along with the location of this trade is very, very important. Also, you want to go with the flows of the market. If the market's telling you to be bullish, then be bullish. If the market's telling you to be bearish, then be bearish. Go with the flows. Don't have a bias and just react to the information the market presents you. Don't try to predict, instead react. By doing this, it will get you in before the move occurs, as you can see with those two examples. Also, your risk is going to be much smaller and your reward is going to be much larger. You're shoot for at least a 2-to-1 or better, 3-to-1, 4-to-1, whatever the case may be, risk to reward, because that will put you in the position that your losses are small paper cuts and your wins will take care of themselves. By using this strategy, I'm cool with taking 2-3 losses that are really small paper cuts that don't even make me bleed. But I know when I take that one winning trade, I'm going to get a lot of points and the winners are going to take care of the losers. For example, here was a losing trade with this same strategy. Remember, you're not going to have a strategy that wins 100% of the time. That's why risk management is the most important factor of any profitable trading strategy. In this example, I took a losing trade going with the same thing that I've explaining this whole video. We were spotting buyers here at 4415, the lower portion of this demand zone. I took the market long when we were holding it on this weakness, but on the tape we were spotting buying, and then I had my stop loss a little bit lower. Eventually the market rallies higher and we start pulling back lower. My fill was at 4415 and I exited before my stop loss because I developed weakness in the market and I took a 2-point loss. As I mentioned, I will take paper cuts all day long. A 2-point loss is nothing when you're winning 8 points, 10 points, 20 points on your winners. If you cannot accept a loss, then you will be a losing trader. You got to position yourself to make the wins take care of themselves and the losses you accept and our small paper cuts. And this is the strategy that I like to use. It's worked the best for me. And if I had to use one setup for the rest of my life, it would be this, because this is the setups that I've made the most amount of money on in my trading career. And I'm going to wrap it up on that note. If you got anything out of this video, if you learned something, I would appreciate a thumbs up. Comment if you have any questions. I'll go through the comments. Also, check out the links in the description below. If you're not following me on my Instagram, I recommend doing so. And also, by the end of next week, I currently have about 14 new videos, over 5 hours of new lessons, which I will be adding on order flow to the A to Z course. Tons of new value and added value getting added, and prices will be increasing very, very soon because of all this value add. It will be there by the end of next week. And on that note, I'm ending it. Peace.